Good afternoon, everyone, and welcome to today's webinar. I'm going to give everyone a few more minutes to just get logged in and ready to go, but I want to thank you all so much for joining us today for our GovCon accounting webinar. Today's presentation is going to focus about setting up a DCAA compliant accounting system as well as getting your budget ready to go for 2021. My name is Trilby Lawless, and I am a member of the Big Time Marketing team. And we're really thrilled to be partnering today with Golden Gait Consulting and their president, Heather Kourcklas, who is here with me today on screen. She is an expert in all the subjects we're going to talk about today, so I'm really thrilled that she's here to share your knowledge with all of you. And before I go ahead and pass it over to her, I just wanted to cover a few things about today's webinar. First up, it is being recorded, and I will send out a link to the recording in case you want to watch again or share with any of your colleagues by tomorrow morning, so look out in your inbox for that then. And then second, we will be doing a live Q&A with Heather at the end of the call, so if you have any questions throughout the presentation, please feel free to submit those into the questions panel you see on your screen there, and I will be back at the end to answer those live with you, and if we run out of time for any reason, we will of course follow up via email as well. And then last thing before I hand it off, we have a lot of great handouts to share with you all today. So if you go ahead and take a peek in there now, you'll find 2 Excel budget templates that Heather will be walking through today if you want to open those up and have them ready to go. We also have our Big Time DCAA compliance guide that really gives you a general overview of time tracking and accounting within DCAA compliance, as well as a page on Heather's services and other good things to check out in there. So make sure you grab those before the call, even though I will be sending those out with the recording as well in case you missed them. And with that, I think we're ready to go ahead and get started. So Heather, I'll hand it over to you and be back for the Q&A.
All right, thank you, Trilby. I'm also very excited to be working with you guys and Big Time. We at Golden Gait, we use Big Time for our timekeeping and project management software. So, oops, I think I lost. Sorry about that. So we also use the Big Time software. So I love it. It works really well for us and it provides a lot of information that we need. And so I'm thrilled to be a part of it. Trilby talked about her role at Big Time Software. I've been in the government contracting industry for about 30 years. Did the audit side of things early on in my career after college. And then I served as director of finances and CFOs and controllers for government contracting companies ranging from a small $3 million company upward to a $400 million company. So I've got some pretty good experience, and I've been on my own doing consulting since about 2007 and created Golden Gait LLC probably around 2012, 2013, and been doing it ever since. So very, very excited to be here. So today's agenda, we are going to talk about building your 2021 budget. 2021 is just around the corner. Thank God. And we're going to talk about that. And then we're also going to talk about how to make sure that your accounting system is DCAA compliant, obviously, because that's the focus of this webinar today, but also making sure that that accounting system ties in with your budget so that you can properly analyze your numbers. So we'll go through that. We're going to talk to you about how to compare your budgets versus your actual results, and then of course the live Q&A that Trilby mentioned. So let's get started building your 2021 budget. I always recommend that we start with strategic planning. It doesn't have to be a huge, enormous process. The larger the company you are, obviously, the longer that process is going to be, and the more detail-oriented it's going to be, and more people are going to be involved again. Or if you're a small startup business, it might just be you. So just a quick definition off to the side. Strategic planning is an organization's process of defining its business strategy and setting the direction of the company. It also entails making decisions on priorities, allocation of resources to pursue those priorities. And before you dive into these numbers, it's really, really important that you have a solid understanding of where you want to go. You can't really put pen to paper and put numbers together if you're not quite sure what do you want to achieve in 2021. So this is a perfect time to ask yourself some thoughtful questions. And in doing so, you're really going to get an understanding of where you are in your life and what do you want to do in 2020 in regard to your business. Do you want to grow it? Do you want to kind of stay status quo? You want to take a step back a little bit and think about different revenue areas or a different path maybe, or maybe a different service line? Or do you want to set yourself up for an exit plan so you can go off and do something else in your life? So this is, for me, it's really, really important to do this. And I think putting pen to paper here is incredibly helpful. And the reason why I mentioned that, I mean, we are very much, everything is online. And I'm from back in the day when you come out of college, you're actually running numbers on 13 column paper and adding it with a 10 key. We didn't do the computers like that very much. It was just kind of, they were coming out and businesses were starting to use them. And pen to paper for me, it just gets the creative juices flowing. It really makes you think about things. And as you start writing it, other ideas come, other things jump out at you, or you realize, hey, I really don't like doing this. I don't like doing this piece of my business. It's lucrative, but maybe I want somebody else to do it. So again, pen to paper, I can't emphasize it enough. I use a strategic coach. And when he mentioned that to me a couple of years ago about doing that, I thought it was just ridiculous, but it's pretty powerful stuff. So try it if you don't already do it. So some thought-provoking questions that I know I've asked myself over the past couple of years, and every time that I do my budget and start thinking about what I want to accomplish in the upcoming year is, where are you in your work-life balance? And that's really, really important because that's going to set the tone and be the baseline for how much you really want to do in your company. Are you ready to grow? Do you want to take on some hefty business development, or do you want to take an easy year? We all know that 2020 has been rough. It's just been really, really rough. And it can either invigorate you and get that drive going, like I really want to go for it in 2021, or you may want to just take an easy year and be completely wiped out and drained from what 2020 did. So you want to ask yourself, what are you ready to focus on in 2021? You want to think about the financial targets for your company and for yourself. You want to think about any new revenue streams that you want to explore, like I mentioned earlier. You want to anticipate any unusual expenses this coming year. Is there something that's coming down the road that's major that you need to either fix depending on what you do in your business, or is there a big piece of equipment that you need to buy in order to continue doing what you do, or are there just some purchases that you would like to make? Maybe you guys need some new laptops. Maybe you want to outsource your IT department. Maybe you need some new software. So you want to think about those things as well. Obviously, if you're a government contractor, you want to think about your compliance requirements and if there's anything new to consider. Depending on the type of contracts that you have, whether it's a fixed price, a T&M, or a cost plus, there are different requirements for those types of contracts. So you want to make sure that you understand what those are and consider if there's anything new that you want to bid on, or that maybe you're being awarded and it kicks off in 2021. You need to think about that and make sure you understand all those compliance requirements. The other thing is you really want to understand, how do you best manage your financials? What are the key performance indicators that help you monitor your business? Basic financials, balance sheet, income statement, profit and loss, cash flow, those are all pretty standard. But different businesses and different CEOs and presidents, they look at things a little bit differently. Someone might be focused more on your days sale outstanding, on your accounts receivable, because you have several clients that just, they don't want to pay on time. So you really need to monitor that closely, and you want to see that weekly report. You might have a couple projects or a couple contracts that You wanted to get into that area, so you bid it with a very, very low profit. You might even be losing money on it, but it was a strategic decision because you wanted to get into that market. You still want to monitor those pretty closely because you want to make sure you're not losing more money, or you're breaking even, or it's doing what it should be doing. So you really want to think about how best do you personally manage your financials of your company. So now that we got through strategic planning, I would like to talk about working your numbers. You have all this information, you've done all this brainstorming, you've got some ideas about where you want to go. So let's start working your numbers. You want to start with your costs and your expenses, obviously, because you need to know how much revenue do you need to bring in order to pay for what you have. You've got personnel, you've got salaries, you might have some rent space. You've got dues and subscriptions, you've got expensive software that you've got to pay for, you've got people, obviously, you've got your people that are performing on your contracts, you've got your human resources, your IT, you've got costs. So you want to make sure that you understand and you identify all of your costs. And I broke them out into some buckets for you to think about, that there are some absolute and quite necessary costs of your business. Again, if you've got a lease and you've got office space, regardless of what's going on in the environment and in the world today, you have to pay for that space. You've got salaries, you've got health insurance, you've got fringe benefits, you've got taxes. You've also got costs that you need to operate and conduct the activities of your business, training your staff, computer supplies, dues and subscriptions, the things that you need to do to help the operations keep going. You've got costs that your business is already obligated to pay. You've got consulting and subcontractor agreements in place, especially if you are subbing out some of your work on your government contracts. You've got subcontractors, and so you've got an agreement with them, you've got to pay them. Then lastly, I identify estimated expenses for my wish list. What are the items that I'd love to do this year? And I kind of put them in a separate bucket because they're a wish list. You don't have to have them. And depending how the numbers fall out, it's going to tell you whether or not you can afford to go ahead and do some of these things. Is this the year that you want to invest in business development? Is this the year you want to hire a consultant to help you grow your business because that's what you decided to do through your strategic planning? Do you want, again, like I mentioned earlier, do you want some new laptops? Do you want some new equipment? Do you want some iPads? Do you need new office furniture? So I kind of bucket this off to the side, and then I look at that after everything is said and done, and I know what my bottom line is. Some people look, when they do this piece of it, some people look at their costs annually, some people look at them monthly. However you think about your numbers best, do it that way. For me personally, I think about things by month. This is what my monthly bills are. These are what my monthly charges to Microsoft 365 and some of the other softwares. I know what they are each month. So I start my cost accumulation by month, but I want to annualize it. Or if your business is such that you think things through a little bit better from an annual perspective, you want to then be able to break it out by month, because you're going to be doing your numbers and your financials monthly, and you want to be able to compare apples to apples. So once you've got your costs and you've got a good idea of what those are, then you're going to start looking at your revenue. Costs is more direct in the sense that, this is what I'm obligated to pay. It is what it is, except for some of the things that you want to do further down the road or in your wish list bucket. Revenue is a little bit more subjective in a way. You do start with your current baseline. So you're going to think about all your clients, and you're going to think about the services that you currently provide them. And you're going to then extrapolate it out and figure out what your backlog is with them. So we all have our clients, and we know what we're doing for them on a monthly basis. And if you're in professional services, sometimes that varies depending on what they need. Sometimes it's consistent, like if you have a fixed price arrangement with them and you get the same amount of money every month regardless. And then, sometimes it ebbs and flows depending on what the client needs. So it's really important to sit down and evaluate each project or each client, however you're looking at your business, and understand what's your current baseline, what's my backlog. throughout, for the next year, for 2021. I also take into account my confidence level in my current client base and my backlog. So once I kind of run those numbers and figure that out, I step back and I ask myself, okay, is this 100% solid? Is this 90% solid? 50 or 100? Is my client thinking about selling his business this year? And if he does, what does that mean for me? And the services that I provide, is that going to impact my revenue if he sells his business? So those are the sort of things that you want to think about when you're looking at your revenue. And you can always you can apply, the confidence level percentage. And so let's say you have a client and you're like, oh, I'm going to get 100,000. I usually get about $100,000 in revenue from them. But he's thinking about selling his business. So I'm going to put that confidence level at 50%. And I'm only going to budget for $50,000 of revenue instead of the 100, because I want to be conservative. And being conservative when you're thinking about these numbers and understanding what worst case scenario is, in my opinion, is the best way to do it. Because if you know what worst case scenario is and you're comfortable with that, then you're good to go. So the other thing here that I like to do is also like to think about the additional services my current client base may need. So maybe they're on an old accounting system, and I know that accounting system is pretty much being laid to rest, like we've had with some of the Deltec products. I know they're going to need to go to Cost Point, or I know they're going to need to upgrade to another system. So I'm thinking, this might be the year that they could do that. So I want to start thinking about the additional services that my current clients could benefit from. And I want to factor that in, again, with your confidence level of being able to pitch that and sell that and close that deal with your current client. But you also need to think about, are they going to reduce the services that they need from me? So kind of conversely on that accounting software system note, if I've implemented a new accounting system for them this year in 2020, that's a huge chunk of revenue. So I'm not going to have that in 2021. So I need to not just look at the numbers. Oh, I did this amount of money with this client and this is great. It doesn't mean I'm going to do that same exact amount in 2021 because I did a huge system implementation. Now, obviously, if you're a government contractor and you've got an award and it's a 5-year award, you're pretty much going to know what you're doing over the course of that. But depending, again, this is all depending on the nature of your business, and only you know the nature of your business and how your current clients work and how your projects work. So you need to think that through, what's going on in your business, and then, apply that accordingly. Okay, so now you want to continue looking ahead and think about also, if you lose a client or some of their workload, like I had mentioned earlier, you want to ask yourself, how easy is that revenue to replace? So I go from that system implementation. I had a really good year with this client. I know they don't need that. It's going to drop off. So I need to replace that revenue, right? Because my costs over here in 2020 are being supported by that higher revenue. And unless I regenerate more revenue to cover those costs, then I'm going to have to reduce my costs. So it's kind of one or the other. So you want to think about, when you're looking at your numbers, oh, that's dropping off, and how am I going to replace that revenue? And this is where you start thinking about your new business revenue targets. What new business do you need to cover those costs? Are you comfortable with the effort that it's going to require to obtain this amount? And this goes back to your strategic planning and kind of what you want to do in 2021. Do you want it to be more of an easy year? Do you want to scale back a little bit? Are you really ready to go? You want to think about, and you want to document also, the increase in costs that are associated with any new business revenue goals, because it's not just going to drop automatically to the bottom line. You're going to have costs associated with any new revenue that you generate. So you don't want to forget to add those costs in there into your budget, whether it's salaries, whether it's laptops, whatever it is. You've got to ask yourself, okay, I want this new revenue. What do I need to do to be able to generate that revenue? The last area that I suggest thinking about is, are there any new revenue streams that you're interested in going after? Or are you comfortable exactly kind of what you guys are doing now, what your company's doing now? For me, I've been sitting behind the desk a lot for the past 30 years. I've been crunching numbers. I've been doing system implementations and being controller and CFO and a lot of compliance and policies and procedures. And I'm now getting to a point in my career that I'm very interested in training. And I'm very interested in doing things like this and taking all the knowledge that I've accumulated over these 30 years and sharing it and trying to help small businesses achieve what they want to achieve and help them grow and be a partner with them. So that's a new revenue stream for me. So I'm working that out. I'm thinking about what those revenue numbers look like and what those cost numbers look like. So that's a good example for that one. So lastly, now you've got your revenue, we've got your costs, now you've got your revenue, and you can bring it all together. So you can finalize your budget, annual and monthly budget. And if you can break it out between existing business and new business results if it's helpful. For me, it is. So I've got my existing business that we talked about, our current client base, our current backlog, et cetera. And then I always do like a new business column, if you will, or a new business tab in my Excel workbook and understand what my new business is so that if I don't hit those numbers, I still have a reality check of what existing looks like. But you do want to create these numbers monthly as well as annually. And another thing that's actually not on the slide that you should also consider is seasonal fluctuations. So again, as always, only you know your business as well as you know your business. And there's always seasonal fluctuations in any business, whether you are a tax CPA and you've got tax season, or whether you're launching a new product and that launch period is always successful this time of year, whether you're in my position and year end starts to become very busy because you're supporting your clients through their audits and their budget process and all of that. It's seasonal. So you want your monthly, you don't want to necessarily just take your total annual budget and divide it by 12 and that's that. You want to also take into account some seasonal fluctuations. So once you do this, you take a step back and you ask yourself, am I comfortable with these numbers? Is this doable? When you first look at things, are you overwhelmed? Are you stressed? Does it cause a lot of anxiety? Like, oh my goodness, I can never do this, or this is a lot, or I'm not sure. Or are you really, really excited? Like, hey, I'm really up for this challenge. This is really exciting. I've got some cool stuff that I want to do in 2021, and this is good. I think I can do this. This is where you want to revisit your thoughts about the timing in your life as you step back and look at this bigger picture. And because if you go into 2021 or any year and you're nervous or you're stressed or the numbers make you overwhelmed, it's not going to be a successful year. You're starting off on the wrong foot. You need to start off saying, I'm excited about this, I can do this. And, that's motivation. And that's going to keep you going. So now that you have this, and last bullet, I apologize, revise as necessary. So depending on how you're feeling when you're looking at your numbers, go back and adjust. Can you cut some costs? If your bottom line is not what you want it to be or what you need it to be, can you cut some costs? Are the revenue objectives too high? And you're like, I really don't have the energy to do that this year. So just revise as necessary. So this becomes your baseline to be able to compare to your actual results. So you've got your budget, it's annual, it's monthly, and then you're going to be able to take that and compare it to the actual results that you do, and you're going to be able to look at apples to apples and be able to really analyze things. So let's take a look. It's part of the attachments that we gave you, but let's take a quick look at a master budget sample. And bear with me while I do this. I am not the most technically savvy person in the world. Okay, so this is a master budget summary sheet. I do all of my budgeting or most of the budgeting on Excel workbooks. Most of my clients are government contractors. So it's probably a 20 to 25 tab workbook, if you will, depending on their company and their business and how they like to look at things. And we've got revenue, we've got their direct costs, which is in this particular example is direct labor, subcontractors, ODCs, total direct costs. Then we've got our gross profit cost and percentage. And then we've got our indirect cost buckets over here based on government contracting, at least this particular client's government contracting, indirect cost rate pools, fringe benefits, overhead, G&A. And their facilities line, it's not a pool, it's a sub pool for those government contractors out there. It's a service center that gets allocated out to your overhead and G&A. But this particular client likes to see on the front of his income statement, what are my facilities costs? Because if we allocate it out in the spreadsheet, it's going to get buried between overhead and G&A. So that's why that's like that. You've got your income, your other income, and you've got your unallowable expenses, which if you're a government contractor, you know that's pretty critical to have those broken out. Got your net income, you've got your percentages. All these supporting schedules are multiple tabs in this file that support these numbers. But this is a really good, I think, picture of what a monthly and annual budget would look like. Okay, go back here. Okay, so that was that. Okay, so now we're going to talk about setting up your accounting system to be DCAA compliant, but also to be able to tie in with how you've set up your budget. Just keep an eye on time. Okay, so what you want to look for in an accounting system is you want a system that is not just affordable, but can also meet your company's needs and requirements. If you're a small business and you're starting out, and I get that, been there, done that, you don't want to spend a lot of money on your accounting system, and I get that. If you're a small government contractor and you haven't won any awards yet, I mean, it's a little bit of the which comes first, the cart before the horse, the chicken before the egg, you know, that sort of thing. So, but you really, 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 really need to set up an accounting system that is compliant. And you can use multiple tools to create one accounting system. So you can use a Big Time that has your DCAA compliant timekeeping, expense keeping, client invoicing, project management, and you can tie that into a QuickBooks, which is very inexpensive and very manageable for a small business and even mid-sized businesses, depending on the types of contracts that you have. You don't have to just be a small business to use those softwares. And then there are other add-ons that you can use to QuickBooks that can develop your statement of indirects, or Excel obviously is a wonderful tool that you can also use that can be part of your accounting system as a whole. So when you're setting up, designing, or even remediating your accounting system, it must be a reflection of how you define, operate, and manage your business, along with the ability to successfully meet the compliance requirements. If you're a government contractor, you know that, yep, there are a lot of compliance requirements, and you really need to make sure your T's are crossed and your I's are dotted. Or, you know, it could be a little bit uncomfortable with audits and costly if you don't have these things in place. So again, I've said this several times throughout our discussions, your webinar and your accounting system should be designed in the same structure in order to properly and easily analyze financial information. You want to be able to compare apples to apples. It's going to be really, really hard to analyze your numbers if your budget is set up one way, but your accounting system is set up completely different. It's going to be so hard. You're not even going to be able to do it. So you really want to make sure the buckets that you have, whether it's in your budget, match your accounting system, or your accounting system to your budget. And this is a really good time if you have an existing accounting system in place and you've spent all this time doing strategic planning and putting your budget in place. This is a really, really good time to ask yourself, is my accounting system set up the way it needs to be set up? So, and if it's not, and you like how your budget is presenting things a little bit better, as long as it's still compliant with government contracting rules and regulations, this might be a good time to remediate your accounting system. So think about that, keep that in the back of your mind as well. Some key compliance areas, obviously DCAA key compliance areas for accounting system. We wanted to just kind of mention a few. Chart of accounts that properly identifies, classifies, and segregates your costs into the appropriate projects and cost pools. Government contractors, government agencies, they want to be able to come in and see that you understand the difference between a direct cost and indirect cost, and especially an unallowable cost. And your system is set up and your chart of accounts is designed to be able to capture and classify and segregate those costs appropriately. You want to have a project management system or tool that captures your reports on project information accurately and timely. So you enter all your costs, your labor, and your expenses. You want a project management system that's going to be able to report on all of those costs by project, by contract, along with the revenue, so you can be able to best manage your projects. Timekeeping payroll system that accurately captures all your labor hours and your costs. That's critical. It's also critical that timesheets are done in a certain way. They're done daily. They're approved by the employee. They're approved by the supervisor. So there's a lot that goes around that. We don't have time to get into that today. We want to be able to systematically generate a customer invoice from the costs that were entered into the system in accordance with the project terms and conditions that are in your contract. I know a lot of companies prep their invoices in Excel. Not necessarily horrible, not perfect, not ideal. I don't recommend it if you can avoid it. But at the same point, if you are doing it that way, you can always put some internal controls and processes in place to meet the requirement for compliance. You want to have the ability to generate systematically, accurately, and obviously timely financial reports to include a statement of indirect expenses. You want compliant document policies and procedures that support your operations. And it's kind of been interesting to come into some companies that have this beautiful book of policies and procedures, and then you ask them how they're doing things and it has nothing to do with how they've got it documented. And that is a big red flag. So when you have an auditor come in, or you have someone coming in who wants to certify or approve your accounting system, the first thing they're going to do, they're going to ask for your policies and procedures, and they're going to test whether or not you actually follow them. So don't make the mistake of grabbing another company or a friend's policies and procedures and just putting them in place and not either A, tweaking them to reflect how you do things, or making sure that you actually follow the way that's being done. But 99% of the time, I mean, no two companies are alike. Some can be similar, but you want to be able to have a set of policies and procedures that work for you. You want your systems to be able to support any audit, such as a DCAA pre-award audit, incurred cost submission audit, financial statement audit, and you want it to have the ability to achieve an approved accounting system. This is really important, especially if you're going after certain contracts. CIO SP4, I don't know if anybody's bidding on that, should be dropping in December. Proposal should be submitted in March. Having an approved accounting system is a requirement. And then there are other pieces of that. If you're a small business, you don't need certain things like a purchasing system or an estimating system. But if you have those and they're approved, you can get points added to your score so that you have more likelihood of winning. So keep that in mind, that you want to have a system that has the ability to achieve this, so that if you want to bid on something and it's a requirement, you can get an auditor in to approve your accounting system and you can meet that requirement, or you may not be able to bid on that contract. Essential KPI, key performance indicators, and audit reports that should be able to come out of your system are the income statement, balance sheet, trial balance, statement of cash flows, so you can help manage your cash, your accounts receivable aging, which is going to tell you all the monies and invoices that are due to you from your customers. And then conversely, you want your accounts payable aging, which is going to document all the amounts that you owe everybody else. You want your project status reports. We've talked about that a little bit, where you're going to understand the state, the financial state of each project. Am I making money? Am I losing money? Am I just break even? And then it helps you figure out how you want to move forward with that project. You want a statement of indirects as a government contractor, absolutely 100%. Whether that is systematically prepared out of your accounting system, obviously that's ideal. And at a bare minimum, you want to calculate it in Excel. So there's a lot of information you can just download from your accounting system, like QuickBooks, if that's what you're using, and create your statement of indirect expenses. Lastly, at least for me and a lot of my clients, is the labor utilization rate. So they want to see how productive are your employees. Are you considering someone 90% billable and that's why you hired them, but they're only billing 50%? So you're really losing some money on this personnel if your original intent for them was to be close to 100% billable. I mean, nobody's 100% billable, but you know what I mean. So you want to make sure that your staff is being utilized in the manner in which they were originally intended when they were hired, or maybe you adjusted and said, oh, I don't want him to be 100% billable because he's also very valuable here in business development. But all these reports, they're all important because they're going to help you see where your business is, and they're going to help you manage where it's going. Okay, let's see, next slide. Okay. So now we've got our budget. Now we've got our actual results that's coming out of our accounting system. And hopefully you're doing it monthly so that you can have monthly numbers and it's not something that you're just waiting until the end of the year to do. And we're going to compare your budget versus actual results. You're going to compare the data. So there are multiple ways that you can compare your data, budget month to actual month results, that we've talked about a little bit. You can take your annual budget, which you have, and then let's say it's April. Then you take your year-to-date actual results as of April 30th, and you can drop that in your spreadsheet. And then you can take out the rest of the May through December. So all you have is your year-to-date numbers through April 30th, and you can take that and you can compare it to your total annual budget, which then will give you, oh, this is the amount of money, or this is the amount of revenue that I have to earn for the year to meet my budget, and this is how much I have left to spend. And so you can look at it that way. The way that I really like to do things, and my clients really like to do things, is what we call a rolling forecast. So this is an additional tool and an additional analysis. Also, if your business has a significant shift, nothing ever goes 100% as planned. And you can either win a major job that you never expected to win, and wow, I really want to see the impact of this, or, unfortunately, you can also lose a big project or a big client. And then you really, right then and there, you want to understand the impact to your business. So to do this, you take your annual budget, which is broken out by month that I showed you earlier. You want to enter in your actual results for each month that's been completed, and then you want to reforecast the remaining months, which will end up providing you with a rolling forecast. And I'll show you an example of that. Okay, so taking a very similar spreadsheet, almost exact, because it's in the exact format of our original budget. And over here is the original budget number. So when you look at the handouts that you get, you'll see that these numbers tie exactly into the original budget. And here are the actual results. So January through September, we've dropped in actual numbers. This is what they did on a monthly basis. And then we're like, okay, so what's reality? You know, we didn't know what reality was going to be in October or back in November of the prior year, but we know now because we're facing it. This is obviously if you're looking at it as of September 30th, which this client was doing. So we've got our actuals. What's reality? So I'm going to go to all my supporting schedules and I'm going to change numbers to give me my reality. And what I'm calling that is a reforecast. So now I have a combination of my actual numbers from January to September. I've got some reforecasted numbers from October to December for a total new reforecasted amount for 2020. And then I can take that, so this is my new reality, and I can take that and I can compare it to my original budget and kind of see what happened, or I can see what the numbers tell me happened. We missed our revenue goals by 300,000. We missed our our profit goals. We missed our profit goals by 57,000. So again, I will say this over and over again, numbers never lie. So when you've got this information, it's there, it's actual, it's real, it's true. You can take it and then you can really make some good informed operational financial decisions for yourself, some updated strategic planning decisions for yourself. So this exercise, I love this exercise. I do it for myself. I do it for my clients. It's extremely beneficial. The other thing that's really beneficial about doing something like this, when we get to December, we're not scrambling to close the year and reconcile everything and get ready for the audit. December becomes just another month to do the financials, instead of just, oh my gosh, I've got the whole year to reconcile. So keeping up on your financials on a monthly basis is very important, and it's very stress relieving. So you're not worried about everything at once at year end. Okay, so we looked at actual budget versus actual results. Lost where I was for a second. So now that we've got the numbers, let's analyze it. Let's identify what's working, what's not working according to our original plan. You're going to know where you need to rethink and adjust things because you have it down on paper and these are your actual results, just like we showed you in that prior example. We're $300,000 short in revenue. We're about $57,000 short in net income. Okay, I need to rethink and what am I going to do for the rest of the year? Sorry. And then you want to figure out why, like what happened? What didn't I plan for? What did I miss in strategic planning? Or is it just life happened and we just need to adjust? Then you can determine your next course of action. I've spent some examples of this. I've spent way too much on this area with little progress. Should I come up with another plan? Bench the idea for now. Has it been a waste of time and money? Yeah, kinda. Okay, I'm not gonna waste any more resources on this. Or maybe you're going to be like, wow, we're surpassing our revenue targets in this area and we need to put more resources here. Like we need to build up this line of business because it's really taking off. So that's what all these numbers are going to tell you. So if your results indicate that you're on track, that's great. That's amazing. Stay the course. Enjoy the rest of the year. Or maybe start thinking about your next goal or objective, or even just something non-business related that you've always been wanting to try. And that's it. I will turn it back over to Trilby and have her manage the question section.
Awesome. Well, thank you, Heather. That was great and a lot of good insights shared. We have a few good questions here, but if anyone in the audience has some more questions that you just haven't submitted yet, please get those in because we have a good chunk of time here to go over them. First up, Heather, this person asked, how far in advance do you recommend creating your budget?
It depends. It depends on the size of your company. Again, if you're a $20+ million company, and you've got a lot of contracts, and if you've got a lot of staff, you might want to kick it off in September And because you're going to have other people involved in it, you're going to have project managers that are managing your projects, and you're going to need information from them. So the bigger you are, the less in the weeds you are. So you're not going to know everything that's going on. So you're going to be relying on other people in your company to feed you information to be able to pull those numbers together. And also, if you're a $20-25 million company, as the CEO or the president, you're not going to be crunching those numbers. Your controller is, or your CFO is, or your accounting manager is. So you've got to put a process in place for your strategic planning and your budgeting to be able to meet certain deadlines. I mean, ideally, I always recommend having your budget locked down by December. And for some of my clients, they have to, because their board meeting is like before December 15th. It's before the holidays. So they need to have their budget set and finalized and ready to go to the board for approval. So then we'll start kind of planning out in August, like late August. Summer's winding down, kids are going back to school. So in August, we'll kind of set up the budget planning document, if you will, which is, who's involved, deadlines, what's due when, and then kick it off in September, a little bit of strategic planning, and then you start doing the information gathering from the PMs and all the other departments, pull it together, and you're always going to have a couple drafts. Like you'll have the first draft, then you'll have a second draft, then you'll have a final draft. If you're a smaller company, then, and it's you, and it's a one-man show right now, then it's probably something you can start doing around now. And if you don't have a board, you don't have to have it done by a certain time, but you really do want to go into 2021. And for me, it's always kind of like before the holidays. Holidays come, you want to be able to kind of wind down from the year. So depending on the size of your company, the amount of people that you have involved in the process will dictate how much, whether you start it in September, October, November, and obviously if you have a board that needs to approve it, then you're going to want to start it in time to make sure that you meet that board of deadlines requirement.
Right, makes sense. This next question we have here, I know could probably be a whole topic in yourself, but just maybe high level, what are your tips for keeping your budget from going off track?
Monitor it every month. Monitor it every month. If you're a small business, look at things every week. Depending on if you've got long-term projects, if you've got short-term projects, if you've got some fixed price revenue that comes in every month, it really depends. But monitor your numbers every single month and get into that habit. That is the only way you're going to be able to stay on top of things, so that you can see, oh my goodness, things are going to go south. Or wow, we just, won this big project. I will look at sometimes I'll look at my numbers weekly. I just will, especially if I'm trying to make some big decisions on something. Or if things are going really well, I still want to make sure, okay, things are okay, this is good, we're good to go. But monthly, absolutely 100% monthly.
Perfect. And this question here goes in a little bit to big time. So Heather, if you know, that's great. But if not, Sherry, we will follow up with you afterwards to make sure we get a correct answer for you. But she asked, is there a way that big time can produce a variance report? Do you have experience with that, Heather?
What type of variance report? Like a budget versus actual variance report?
She does not say, but Sherry, if you want to send another follow-up question. On budgets, she said.
Okay, so big time is not a general ledger system. It is a timekeeping, expense reporting, project management system, but it's not going to be able to, from a project perspective. So for example, you're going to have costs, indirect costs that are not project related. You're going to have your human resources director's salary, you're going to have your accountant's salary, you're going to have legal fees, you're going to have rent, you're going to have computer supplies, office supplies, those sort of things, facility costs. Those are not costs that you charge to a contract, at least in this scenario that I'm saying. So there's always going to be costs that you don't charge to a contract. And Big Time does not capture those costs because it's very timekeeping, expense, project reporting, invoicing focused. So Big Time information feeds wonderfully into QuickBooks and probably other softwares as well. So you take that piece of your financials and your financial information out of Big Time and it syncs with QuickBooks. But then you've got your other costs in QuickBooks that make up your entire financial picture each month. So no, it can from a, I believe it can from a, no, I know it can from a project perspective. So if you have a project budget, like on my accounting system implementations, I do project budgets for those. And so I enter those into Big Time so that when I give my client an invoice, they can see this is what we budgeted, this is what we're spending, and they can see the variance. So project perspective, yes. Financial perspective as a whole, no. Hope that made sense.
Perfect, I think so. This next question kind of ties into that. This person asked, what accounting software do you recommend to your clients?
Again, it depends a little bit on cost. Deltec products are wonderful for a government contractor. They are proven time and time again. Obviously, it's not just the accounting system itself, but it's how it's designed. And if the data is good going in, the data is going to be good coming out. If data is kind of garbage going in, it's going to be garbage coming out. So it's not just the system, but also everything around the system, policies, procedures, etc. Small businesses do really well with QuickBooks and an add-on like Big Time. And you know, if you can't afford like a Deltec or a Uninet or a JMS, there are others out there like Microsoft Nav. I am not familiar with Microsoft Nav. My area of expertise is primarily Uninet, QuickBooks, Big Time, and Deltec products. But there are other softwares out there, but for me, those are the key ones for government contracting compliance. Doesn't mean there aren't other ones out there, but I wouldn't know any of the other ones other than the ones that I'm really focused on being an expert in.
Perfect. And last question we had come in here. This person asked, what is the process like of getting an auditor to approve your accounting system?
It depends. If you have defense contracts, usually you're a cognizant agency, or you can ask the DCAA or your cognizant agency, like if DFAS, you can request an audit and they can come in and they can actually do the approved accounting system if it meets their requirements of doing so, because that's government resources. Your client, depending again on the situation, one of your clients could also request an audit of your accounting system, or depending on the RFP and the requirements of it or the contract that you're going after, you can do a special, what's called an agreed upon procedures audit with your financial statement audit company. So whoever does your outside financial statement audits or your annual audits for the bank, for your loans or your line of credit, or if you just do them because you want to have them done, they can do what's called an agreed upon procedures audit.
Thank you. And we had one other question come in. Since we have a little bit of time, we'll get to it. Teresa asked, does DCAA require that reports be provided in Excel? You said at the beginning, most use Excel to budget. I was not sure if it was so that it could be provided to the government for, say, the statement of indirect expenses.
So the government does not require that you do the budgeting. I mean, there's no FAR that says you've got to do a budget every single year. So there's no requirement in the FAR for that. That is good business practice. And that is the only way you're going to be able to be successful, is if you know your numbers and you do your strategic planning, you do your budgeting, and you set it up in a manner that is in conjunction with your compliant accounting system. What was the other part of that question? Or can you read it again?
I think that covers it, but here I'll read it through one more time. She said, does DCAA require that reports be provided in Excel? You said at the beginning most use Excel to budget. I was not sure if it was so that it could be provided to the government for, say, statement of indirect expenses.
Yeah, no. Statement of indirect expenses is different than your budget. You can use, if you're using, so I'm going to take it quickly in two pieces. The budget, no, the government does not look at your budget, nor should you ever send the government your company budget. That is proprietary information. That's not information that they need, or they should have. They will be asking for a budget of your indirect costs. So your indirect cost pools, your fringe, your overhead, your G&A. So in a sense, it's, yeah, that's your budgeted indirect cost rates, but it's not your whole entire company budget with your revenue and all your other projects. If you are doing provisional indirect cost rates every year and sending those to the government, yes, I prepare them in Excel, and then I'll PDF a file over to the government. Softwares do have, like someone or a company like Deltek obviously has a very advanced budgeting and planning module. So you wouldn't do any of this on Excel. You would actually do it in the system. The Excel is just more for companies that, don't want to implement a $100,000 budgeting and planning module, but some do. It depends. I mean, a Northrop Grumman or Lockheed Martin, then yes, they probably have the budgeting and planning module in Deltek if they're using Deltek. So hopefully I'm answering the question. If you're not, if I'm not, please feel free to email me.
Yeah, she sent a follow-up and said, for reporting, is there any requirement to use Excel? And I guess the answer would be no. Just depends on where you work.
No requirement to use Excel at all.
Perfect. All right, well, that wraps up the Q&A. Thank you everyone who submitted a question. And if you have any additional follow-up questions you think of after the call, I think on the last slide here, we have Heather and I's contact information. If you're interested in learning more from her or want to hear more about how Big Time works for DCAA compliance. Heather, if you don't mind going to the next slide too, I think we have a couple other things to share before we sign off.
How did I get out of present mode?
Oh, that's okay.
Sorry. Not the most. Yeah. Okay.
Okay, so just as a reminder for everyone, again, the recording will go out tomorrow morning. Look for that in your inbox. And also stay tuned because Golden Gait is coming out with an e-guide titled Budgeting and Cash Flow, a simple guide to goal-oriented budgeting. So if you're interested in getting that pictured there on the left, you can find that on Heather's website, which we'll share out. And then also right at the end of this webinar, you'll see a survey come up. If you could please fill that out for us, it just helps us know how you enjoyed this content today, if you'd like to see anything different, and if you're interested in learning more about either Big Time or Golden Gait. And with that, just thank you so much for joining. And oh, one last bullet point I forgot there. We will also be back with another topic in Q1. So stay tuned for that. Within the survey, you can hit to subscribe to make sure you get emailed if you want to be able to join us next time. So thank you everyone for spending part of your day with us. Heather, thank you so much for sharing all of your knowledge. It was awesome, and I look forward to doing this again soon.
Me too. Happy holidays, everybody.